Hey guys, what's up? How's it going? Welcome back for another video. In today's video, I'm going to be showing you guys which stocks I'm going to be buying inside my Canadian-based dividend portfolio. I'll give you guys an update on my portfolio. I'll show you guys what stocks I'm buying. And then towards the end of the video, I'm going to actually give you guys the reasons why I love dividend investing during a recession or during a dip. So I'll share with you guys some cool tips on why I just love dividend investing and why my portfolio is a dividend growth-based portfolio. Alright guys, what's up? Welcome to the portfolio update. We'll start the video off by giving you guys a portfolio update to show you guys how our stocks have been doing over the past week or so. So we have $103,000 on Wealth Simple Trade here, 103,457 Canadian inside of all of our accounts here. We'll focus on the TFSA first since this is the biggest account that we have inside of a Wealth Simple Trade account. So this morning, we opened up at 89, I guess plus zero, not too much happening this morning. Over the past week, we are currently sitting at negative zero, so not much going on there. Minus about $300, so we've kind of been up and down, but more or less kind of balancing out towards the end there. The past month, we are down negative one, so 1% down there. Not too much going on, just a little bit of a dip. Remember, the market has been dipping overall. The past 3 months, we are down 2. So, overall dips been happening quite a bit, but we have had a little bit of some rebounds here and there. But more or less, the market has been going up and down quite a bit. Whenever it seems like we have a good day, we get a bad day, and then it kind of just balances out. But nonetheless, we are kind of trending a little bit more upwards. We are putting more money in. We are dollar cost averaging. We are reinvesting those dividends. However, the 1 year return over the past year is down negative 6%. So this is a good representation of what's been going on in our portfolio for the past year. So the stock market overall doesn't really matter what you hold at this point. It's probably most likely going to be down quite a bit, whether it's Canadian or US based stocks. We're all down. We can see a big drop here, and it's been kind of been dipping ever since. And our all-time return inside of our TFSA since we first started investing, because we have been dollar cost averaging and because we've had a long time in the market, and because we are reinvesting our dividends, is plus 3%. So nonetheless, we're still doing okay. And once again, we're just riding out the storm, putting money in, growing the account. And when the recovery eventually happens, our TFSA is going to benefit greatly from that. The personal account, which is a little bit more focused on Canadian stocks, is more or less going to be the same. We go all-time return for the personal account, and we're currently sitting at a negative 3%. So that's about minus $500 inside the personal account, but not too bad overall. So the stocks that we're going to be focusing on today is going to be inside the personal account since our TFSA is maxed out. We're going to focus on my account today. I have a little bit of money to buy some Canadian-based stocks here. We have $115, so I'm going to put these into some good quality Canadian companies. And today we're going to be focusing on good quality dividend growth based stocks. I've done a few videos in the past couple of weeks or so where I've been focusing on some of the more beaten down higher yield stocks. So, I bought a lot of AQN, AQN stock, and I'm going to show you guys a graph here, or not a graph, but a little spreadsheet that actually tracks some of this stuff here. I'm going to show you guys some different things about dividend growth and dividend yields and whatnot. And AQN is a stock that is really beaten down. I bought a lot of shares of that. So that's a good one to pick up if you guys want, but I've been buying a lot of it, so I'm going to take a little break. But there's lots of other good ones here, like Canadian Tire, CNR, Canadian Natural Resources. I love all these good dividend growth stocks. I have a combination of medium to high yield stocks, but they all have the same thing in common for the most part, is that they have a lot of growth, they have a lot of dividend growth, and they have decent yields. So again, like TD and TELUS, Power Corporation of Canada, Manulife, all these companies I think are really good companies to buy. Manulife is definitely looking like an interesting company to take a peek at, especially since they've been doing so well from an earnings perspective. The stock is beaten down quite a bit over the past couple of years. But today, in today's video, I'm going to be focused on dividend growth. I'm going to focus on the long-term play, which is going to be more growth-based companies. So this is Alimentation Couche-Tard today, ATD. This is a company that has been doing really good. As you guys know, I'm a big fan of the company. They're a great international-based company as well as being Canadian-based. They sell, they're mostly focused on convenience stores. They sell gas. They are constantly expanding their market and whatnot. And they actually are looking to actually sell cannabis at their stores, which is kind of interesting. I've seen this article recently published on October 19th. I don't know how recent this was, but basically saying that they're looking to expand to probably sell cannabis. And I can see this probably happening in Canada probably soon, since I don't know when it'll happen, but they're always looking to expand their business and grow their business, and they're such a good company, and they have tons of room for growth, and they've done really, really well. So I'm going to be buying a good chunk of ATD. I haven't bought much ATD inside my portfolio for quite a while now. So to give you guys a quick little recap on how many shares I own. So in my TFSA, I have 37 shares. That's about $2,000. We are up 16% in terms of stock growth. as well as the dividends, and it represents about 2% of my TFSA. So it's obviously not a lot. I kind of want to bring that up a little bit since it is such a good company. And inside my personal account, I have about $1,000, up about 18%, and it represents about 6%. So I definitely want to add more ATD. I think it is a great company. It's definitely that long-term buy for sure. So we're gonna put about we'll put about 2 shares in here, and if we're gonna have to go to limit buy, we'll do fractional buy, and I'll just put the total amount I have. So we'll type 115 here, and that'll give us about 2 shares or so of ATD. So that'll go through, and that's gonna be the stock I'm gonna be focusing on buying today. I was gonna buy multiple stocks, but then I figured, you know what, I'm gonna double down on ATD and just grab a nice, good quality dividend growth based stock there. Alright guys, so at this point in the video, I showed you guys my portfolio, I give you guys the stocks I bought. Now I'm going to kind of switch gears, and I'm going to give you guys some more information, show you guys why I love dividend investing. Dividend investing, gets me excited, and during a recession when everything's dipping, there's a lot of cool things and a lot of ways that dividend investing works in your favor. So let's cover some of those things. This is going to be a bit of the longer part of the video, so hopefully you guys can hang in there. But let's talk about why I love dividend investing during a recession. So I just finished mentioning you guys that there's a couple different reasons why I like dividend stocks, and in today's video we're going to cover through here some of the different reasons why I like dividend stocks, especially during a dip or during a recession, whatever you want to call it. I don't know if that's the case of what's going to happen, but during a prolonged market downturn where everybody's freaking out about things, everybody's worrying about, what's going on with their portfolio, what can they do with their portfolio, when can they sell their stocks, when are they going to go back up, whatever, right? One of the big things about investing I like is that you don't really have to focus on that. Now, of course, because I incorporate a portfolio that has a little bit of everything, growth from stock appreciation obviously is a big chunk of my portfolio. It should be a part of everybody's portfolio if you want long-term growth, in my opinion. It's up to you to decide how much. But one of the big things I like to focus on is the dividends earned. And one thing I can do, and one thing I can guarantee, and one thing I do have control of is tracking the monthly payments, and I can see them grow over time. So since the very first month of my portfolio, we've just been slowly investing our money. It's been growing. And here's a cool little graph. It's a crappy little graph I put together. Gets the point across though. Here at the bottom we have the different months, and then we have the dollar amount on the left side here. You can just see that steady increase from dividend payments over time inside the portfolio. And if we scroll all the way down, we actually hit an all new high for October of about $460, and I think we're gonna get hit about $500 towards the end of the month. So everybody's freaking out. Everybody's not worried about. Hopefully you're not selling your stocks. I know obviously some people are gonna be panic selling their stocks. You don't have to worry about with dividend investing because you're still gonna be growing your money. And even though we're in one of the worst times to invest in stocks during, I shouldn't say that, one of the worst times that people feel about the stock market during these kind of dips and downturns of recessions, it doesn't matter because we're still doing good. In fact, we're doing the best we've ever done here. So again, important to point that out. And it comes down to a couple other things, and we're going to talk about that in just a second here. So before we go any further video, I just want to give you guys a quick little update on my portfolio allocation and my portfolio pie, because it's going to matter in the next part of the video that I talk about some of the different stocks I hold and I give you guys an overview. So basically I'm holding VFE, which is the S&P 500, about 50% inside my portfolio, and I have about 30% into Canadian VDY, which is an ETF. So those are my two ETFs, so it's about 60, 70, 80% of my portfolio in ETFs. And then I hold some individual stocks here as well, which I'm going to show you guys some more cool things about dividend growth rates in just a second here. And if you guys want to check out my whole entire portfolio, check out Blossom Social. There's a link in the description of this video. If you guys want to kind of see my whole portfolio and see how my all my stocks have been doing and kind of track my trades and whatnot, you guys can check out on there. Everything's legit. It's all transparent for you guys if you guys want access to it. Alright guys, so the other big thing that I think gets, people don't talk a lot about when it comes to dividend investing, especially during dips or recessions and different things like that, is the dividend growth increases. So here's a spreadsheet which has a bunch of numbers that I'll lay out for you guys in just a second. I threw this up really quickly. I did this all manually. If you guys know a tool that has this kind of information on it that I don't have to punch in this stuff manually, I can just type in a ticker and see all this stuff, please let me know, because this was a lot of work to do. Not a lot of work, but it took a little while to put together just for the sake of this video. So let's go through this really quickly. So we have the portfolio here on the left side. This is my portfolio. This is going to be the percentage. We have about 10, 15% or so in these different tickers here. We have our ETFs here, VFE, VDY, and then we have some covered call ETFs that represent a very small percentage of my portfolio with some higher yields to get a little bit more income in the short term, or to kind of increase my dividend yield throughout my earlier years, so to speak. But our main focus is long-term growth as well as dividend growth with a little bit more yield and a combination of everything. That's my overall portfolio. So we have these different tickers here. We have AQN, ATD, some of these stocks I already showed you guys inside my portfolio. Once again, check out Blossom Social if you guys want to see all my stocks. Now, here I have the current yield of these different stocks. So AQN has a 6.85%. Now, the reason why some of these yields are really high is because stocks took a big dip recently. So my next point, I'm going to talk about this in a little more detail, but those yields are really high because of the dip. So, AQN you can buy, you're getting a 6.8, almost 7% yield. ATD, you're getting about almost a 1%. Obviously some are more higher yield than others, and you're going to see why in just a second. But we have Fortis, TELUS, TD, CNQ. Most of these stocks are kind of that mid-range, and then you have some higher yield ones that have been pushed down quite a bit here. But the main thing I want to focus on from this graph is the dividend increases. So I have the 2022 dividend increases for my stocks. I have the 5-year average dividend increase, we have the 10-year average, and then we have the payout ratio. So this is averages. So if we have 2022 dividend increase, this is basically saying how much of in a percentage form these companies have increased their dividends. 5 years, how much on average every single year they're increasing their dividends. And then we have the big picture, which is 10-year. You could go further, but 5 to 10 years is pretty good, I think, for most stocks. To see how much they're increasing their dividends. And then we have the payout ratio, which basically is representing in terms of income that the company earns, how much of that are they paying to investors and their dividends. And some companies operate in different forms, like utility companies typically have higher payout ratios. So you have to some companies are exceptions and you have to dive into them a little bit more and look at their financials. But generally speaking, if you want to keep things really simple for most basic stocks, lower payout ratio is better because it means they're paying out less of their earnings to investors and they have room to grow, room to expand, room to basically take hits if anything happens in their business. But you guys can look that up if you guys want to know more information about that. So let's go over this really quickly. So AQN, dividend increase of 6%, not too bad, right? Obviously, higher yield stocks are going to have lower increases, and that makes sense. And a 6% dividend increase of 6% is obviously going to be a lot more in a sense than a 0.76% of 25%. They're both good, but keep in mind that 6% is going to be a bigger percentage here of the overall yield that you're getting. So it's something to keep in mind. But typically speaking, you'll see lower yield companies will have higher dividend growth rates. But I want to kind of show this to you guys that, I showed you guys if you keep investing in dividend stocks, your income will grow during a recession or during a dip. But dividend increases will guarantee that on a yearly basis, your income is growing. So basically, just by holding my stocks, my dividend stocks, and doing absolutely nothing, my income from AQN this year has increased by 6%. My income from ATD has increased by 25%. CNR 19%, Fortis 6%, TELUS 7%, TD 13%, CNQ a whopping 52%. I don't know what went on there, but they did a bunch of special dividends and stuff. Canadian Tire 35%. A lot of these companies also had pretty good years during the pandemic. Manulife 18% and Power Corporation of Canada 11%. So big dividend increases, and I had to do absolutely nothing. So obviously that matters. And then you can see the 5 to 10 year long-term dividend increases as well. So that matters. Here at the bottom, we have the different ETFs. Now, when it comes to ETFs, it's important to note that their dividends kind of fluctuate, and it's kind of hard to track them. And you can't really find tools that show the dividend growth rates. But what you can do, here's a cool little tip for you guys. You can actually go online and you can go to the ETF's websites and you can actually kind of see the yearly distributions by year. So here's a VFV, which is on the Vanguard website. We can go down here and we have total distributions per unit. I'll scroll down so you guys can see here. It's going to be this column right here. So in 2012, we had 0.14 distribution per unit. And you can see that over time, this number has just been steadily growing. So this basically is saying that your income for distributions have been growing inside the ETF. So that's, if you guys are ETF investors or you invest in a lot of ETFs, you can still feel good about the fact that you will see dividend increases as long as the companies held within those ETFs are increasing their dividends, so to speak. And you'll see that VFV is actually a good dividend growth based ETF. There's a lot of dividend increases here. Distribution has been increasing over time. Same with VDY. If you go to VDY, we can go all the way down to 2012. We see a very small dividend, and then it's been slowly increasing. Some years are higher than others, and that's how ETFs fluctuate. But we've seen, generally speaking, an increase in dividends over time. So if you guys do hold ETFs, that's a cool little tool or a cool little way you guys can see how those dividends have been increasing over time. And the very last benefit, we're going to talk about investing into dividend stocks during a recession or during a dip or anything like that I like to feel good about, is because of the fact that you can buy companies with higher yields. You can, number one, you can buy companies that have dipped quite a bit. So the stock price has dipped. You can buy them. You can pick them up at a later date. Here I have Algonquin Power in utilities because it really gives us a good example of this. So we go over the past year. we can see that this stock has been hit pretty hard, obviously. Now, I'm not going to say this is a stock you guys need to buy or anything like that. It's up to you guys to decide. But one thing we can look at, as long as we're buying good quality companies, like we could bring up TD, for example, we can see that TD stock is down 3% over the past year. We could go year to date and say that the stock is down 14%. So that's a better representation. Year to date, it's down negative 14%. This is a good quality company. You can't go wrong with buying the big banks. But the cool thing is that whenever these stocks go down, you can now buy them and get that stock growth when the recovery happens. But the cool thing a lot of people don't think about is that now that dividend yield has increased because the stock price has decreased, but their dividend distribution, as long as they're a good quality company, will not change. So you kind of get that higher dividend yield as well. So that's a cool thing about buying stocks when they go on sale. Same with AQN. We could go here and go year to date, it's down negative 21%. Well, the big reason why this dividend yield has increased so much over the past year or two is because the stock price has gone down. So now you can buy that stock and they haven't decreased their dividends yet, as far as I know. So that dividend yield is really high up there. Again, you want to make sure you're buying good quality companies that don't decrease their dividends. So check out their history, check out to make sure they're not decreasing those dividends, because that obviously matters. Because, if they're going to just decrease their dividends, it doesn't really, it doesn't work, really well. But if you have a company like TD is a good example, if you go over the past, let's look over history. We've seen a dip in 2018. There was a financial crisis. They never decreased their dividend. You could have bought, the company and get those high yields. Even during the pandemic in 2020, everybody, including myself, was buying here because the stock went down, so you could buy the stock at a cheaper price, but you also bought into that dividend yield at such a higher yield. So that's another good reason and another cool way to buy dividend stocks during a recession. Alright guys, that's it for today's video. So like usual, let me know what you guys think in the comments. If you guys did enjoy the video, please be sure to give it a thumbs up and subscribe to the channel if you guys want to be notified and when I do these videos. Thanks for watching guys. Hope you guys are having yourself a good week. Stay warm and I'll see you guys later.